Well, Nvidia posted a slight beat on earnings in its latest quarter despite a big year-over-year decline in its gaming revenue. The company's betting big on AI and extending its AI ambitions in that field. Let's break it all down with Arete Research co-founder Brett Simpson. Brett, thank you so much for being here. So the company's been in AI for a while. It seems to be really good at sort of branding itself, right? Related to whatever the latest buzzword is. So how big is the opportunity for Nvidia in AI?
Yeah, thanks, Julie. I think if you look back to the data center division a couple years ago, we went through a product cycle called Ampere. And effectively, NVIDIA's revenues was running at about $1 billion a quarter at the beginning of 2020. So we're now moving into the next product cycle, which is called Hopper. And the business is now quadrupled in size. So even though we haven't seen the benefits of new models like ChatGPT, we've seen this revenue run rate really soar during the Ampere product cycle. Now, when we look at Hopper, which has just really been ramping for about a quarter, it's just starting out now, we would expect revenues in their data center division to at least double during the Hopper product cycle and probably double again with the next product cycle that kicks in. And typically their product cycles last 2 to 3 years. So, I think they're in a good place. At the moment, we're obviously in a downturn for semiconductor. You wouldn't think that by looking at the data center division, Nvidia, it held up, very well. But certainly when the products start to get really ramped up into the second half of the year, we would expect to see Nvidia's data center business to really accelerate year-on-year growth.
Now, let me ask you about that. How much does, looks like there was a small miss in January. Does that matter that much when you think about NVIDIA business as a whole and the data center business within that? How much is that really relevant going forward?
Yeah, Jared, I think when you look at the sort of historical fundamentals, this last couple of quarters were tough because you're relying on legacy product and hyperscalers are planning for the next product cycle. And so they really want to invest in the next big thing. And when you look at the size of these new models that are coming out, you need new hardware. So I think folks are looking beyond the current environment, which is obviously a little bit depressed, particularly in gaming. And they're thinking about how can, models like ChatGPT really help to drive an inflection in NVIDIA's business over the medium term. So it's less about numbers near term. It's more about sort of thinking through the next couple of years and the earnings potential of the business.
Yeah, it's more about vibe right now, it feels like, for lack of a better word, Brett. You mentioned ChatGPT, and you said in your notes to us that the next wave in AI-powered chips will be about inference rather than training. In other words, now, if there's an AI chip in an autonomous vehicle, it has to be trained how to drive the vehicle. What do you mean by inference?
Yeah, so if you look at what we've seen so far in NVIDIA's data center business, it's been very training-centric. And so, that's the upfront engineering that makes a model commercial. So you need to go through, rounds and rounds of training. That's been the driver of the business over the last 3 or 4 years. But when you start to deploy a trained model, and this is what's happening with ChatGPT at the moment, you need a different type of architecture, and you need to roll out significantly more compute. So this is really, I would say, the first inference cycle that's required accelerated compute. And we're going to see a lot of new launches over the next 6 months of other models. And so we're expecting to see new hardware from NVIDIA relatively soon that lays out how they're going to approach this. But up until now, it's been training-centric. And as you see people using the service, that's the inference opportunity. So looking out longer term, it's clear that inference will be a much larger market than training. It's just needing time to develop. And really, we're just at the starting gun here.
And sorry to interrupt, Brett, but when you're talking, so to just make the distinction here, when I'm training something that has chips in it, it's repetitive tasks, right? To do something over and over until I learn to do it. Is the difference between that and inference is that I'm being the AI, actually learning to do the thing and making more cognitive leaps?
Yeah. So essentially, when you train, you're teaching the machine how to apply things. You're running data through the model, and basically training the model to do things. And then once that's been completed and it's tested, you roll it out, you deploy it. And so that's the inference opportunity when you actually go into production, so to speak. And that's what we're seeing right now with ChatGPT. So it's really the inference opportunity as we go through this year into next year that's going to be driving a lot more of the growth than it has historically.
Brett, it's difficult to deny that there has been a lot of hype very recently around AI. Google declared code red. We've seen the interest in Microsoft Bing, the search engine, finally leapfrog competitors for the first time in decades, at least that I've been seeing. But when you consider the hype curve, and we've seen overbuilding before, when we consider technology like even 3D printing, crypto back in 2017, which had a direct effect on Nvidia. There was a huge buildup in crypto. Crypto crashed, and then in 2018 there was this big shortfall and increased inventories at Nvidia. I'm just wondering what the thought is in terms of the build out for AI. Any concerns that it might get a little bit overblown in the near term?
Well, I think this is more than ChatGPT. You know, there's many workloads that are going to need to be accelerated that sit around AI. So, you know, I don't want to pigeonhole it and say it's just about putting queries into an API. You know, ultimately, the compute intensity of AI is far greater than conventional computing. And so I think the revenue that's associated with AI will be directly proportional to the computing opportunity here we see long term. I think the adoption is the big question. How quickly does consumer behavior adapt to these types of engines? That's the unknown. But certainly the pace of change, the speed at which these models are developing, and you know, I would categorize this as exponential in terms of the scaling of these models. You know, it's really quite a big product cycle. So I don't want to underplay things or overplay it, but it certainly feels like you know the promise of this technology goes way beyond a sort of chatbot, so to speak.
Yeah, and it certainly goes beyond probably Nvidia too, right, Brett? So just quickly, what are some of the other opportunities in semis? A lot of the conversation is centered around Nvidia, but surely some of the other chip makers are working on this stuff.
So I think the strategic questions that sit around the conventional compute players in data center, I'm talking about AMD, Intel, 90% of what they sell today is CPUs. They're relatively new to accelerated compute, and so they're building up their plans. I think you'll hear more from AMD towards the end of this year. They have GPUs that are going to address the training opportunity later in the year, and so I think that will start to ramp up in 2024. With Intel, they made an acquisition of a company called Habana a few years back, and they've got into Amazon, but it's still relatively small, and I think we need to see more from Intel from that perspective. So I think over the next couple of years, the strategic direction around Intel and AMD is going to be quite important for how investors view those names. In terms of other ways to play AI as a theme in semis, there's various different names that we would throw out. Number one, you could play the bottom of the food chain, the equipment companies that sell into the fabs, you know, guys like ASML, Applied Materials, Lam Research. They're all going to benefit from the growth that AI brings to semiconductor. So that's certainly one way to play this. You could also look at TSMC, you know, the dominant foundry at leading edge that's, you know, got a very high market share of any AI silicon that gets made today and tomorrow. And that's another way that you could play this theme. And then also, we would say one of the areas where I think has been largely underestimated as an opportunity is memory companies. And so, you know, look at DRAM. AI is really memory intensive, and you know these memory players, and I'm talking about the Microns, the Hynixes, the Samsungs. They've had a really tough downturn this last sort of 6 months. They're in a tough spot. But if you're looking at recovery catalysts and the amount of memory that goes into these AI systems, you know, I think that could be a really important catalyst for memory companies, and these are very cheap stocks at the moment.
Yeah, really incredible to just think about some of the potential long-term deflationary aspects and disinflationary potential of this entire sector. Really got to leave it there, but thank you for your time here at Insights. Arete Research co-founder Brett Simpson. All right.